Hey everybody, this is Fernando Zuda, and I am very happy you're able to join me today for the Non-QM Insider webinar. If you're just logging in, we're going to get started in just a moment. In this webinar, we will be discussing the amazing powers of non-qualified mortgage lending. Please hang tight. We're going to get started in the next couple of minutes. I still see people logging in, so I'm going to give it just a little bit more time. Additional people are joining to you. My name is Fernando Zuda. I will be your host today for the webinar. As you know, we will be discussing the benefits of non-QM to you, your customers, and referral partners. I really appreciate your attendance today. We will be starting shortly. For those of you just logging in, my name again is Fernando Zuda. I will be your host today. Thank you for attending the Non-QM Insider webinar. I see that logins are slowing down. I'm going to give it just a little bit more time. Thank you for joining us. I'm thrilled that you're here and that people have an interest in learning about the power of non-qualified mortgages, otherwise known as non-QM. It looks to me like the last person has joined us. If you've just logged in, my name is Fernando Zuda, your host for the Non-QM Insider webinar. Let's go ahead and get started. Keep in mind, I have you all muted. I'm going to ask several rhetorical questions, so nod and answer at home. Just know I can't hear you. Here we go. How's everybody doing today? I hope very well. It's my pleasure to be your host today. As a reminder, the webinar will last approximately 30 minutes, but in that time I'll show you how above average mortgage loan originators increase their annual income by 30% without making hundreds of phone calls. Can we all get behind that? I hope so. I hope we can all support that. Let me first start by saying my above average mortgage loan originators all focus primarily on agency loans. Okay, that's A-paper loans, conventional loans, loans that ultimately get sold to either Fannie Mae or Freddie Mac. Secondarily, they look to place their conventional fallout with non-QM lenders like Home Express Mortgage, my employer. Throughout this webinar, what I'll do is compare and contrast what I refer to as an average mortgage loan originator to an above average mortgage loan originator. So let's take a closer look. According to ZipRecruiter, the annual salary for the average mortgage loan originator is $71,000. A 30% increase is $21,000 annually. How many of you would like an extra $21,000? I'm guessing all of you. Any of us would take an extra $21,000. Am I right? Yes. I'm assuming this is one of those rhetorical questions. I'm assuming you're nodding your head. However, let's take a closer look. Right? Because if you're like me, I didn't get into this business to make $100,000 a year. I'm guessing most of you didn't either. Do you agree with that? So I've made an assumption that if you're on this webinar, you have higher aspirations. Is that fair to say? Because here is another statistic. The average independent mortgage loan originator funds one loan a month. Let me repeat. The average independent mortgage loan originator funds one loan a month. Do you agree with that? If not, let's do the math. The average loan amount in the United States is $354,000 with an average compensation of 2%. $354,000 multiplied by 2% equals $7,080. $7,080 times 12 equals $84,960. Let me repeat, $84,960. Subtract the broker's cut, and that figure is awfully close to the annual income of the average MLO. So yeah, I agree. The average mortgage loan originator probably funds one loan a month. Does that make sense? I'm hoping that does. I'm assuming there's some yeses in there. Now, a different statistic. An above average mortgage loan originator funds 3 or more loans a month. Let's do that same math. The average loan size in the United States is $354,000, using an average compensation of 2% multiplied by 3 loans. That's $21,240 a month. If I multiply that amount by 12, I get $254,888 a year. As you can see, there's a big difference between an average and above average mortgage loan originator. Now, does that sound a little bit more interesting? Knowing I can't hear you, I'm going to answer and say the answer is yes. Okay. In order to get the most out of this webinar, I need you to stay for the full 30 minutes. As a reward for staying, I'm going to give you, as a thank you gift, a mortgage dictionary. It's professionally formatted in Microsoft Word and customizable so you can brand it with your company's information. Send it to customers applying for loans as you're talking with them. If they don't understand a word or term, they can refer to the dictionary. It can be sent on its own or included in a welcome package. This is my way of saying thank you for your time. Now, like I said earlier, my name is Fernando Zuda. I've been selling non-prime loans for the past 18 years. I'm the author of the book, An Insider's Guide to Non-Qualified Mortgages. I have another book coming out shortly called A Comprehensive Guide to Non-Qualified Mortgages. I'm the host of the podcast and blog called The Non-QM Insider, and I've advised marketing companies, tech companies, lenders, private equity firms, and venture capitalists about the non-QM industry. I've been around a long time, and I've seen all aspects of non-prime lending. I promise you there is tremendous value in the information I share with you for free in this webinar, in future webinars, and on my website, The Non-QM Insider. So let's take a moment and get real. So let's get real. At the end of this webinar, I promise you, you won't instantly be making an additional $21,000 a month. It will take time. As a point of reference, using the same information I'll share with you today, I've rebuilt my income from scratch at least 3 times. In fact, my first job after the Great Recession, I made very little money. And to be honest, I was just happy to have a job. But over time, I've been able to steadily increase my income year over year for the past several years. You've heard of the 80-20 rule? 20% of the sales staff produces 80% of the sales. Well, I slowly worked my way into the 20%. What I'm about to show you, if it's okay with you, what I'd like to do is briefly share with you what's motivated me over the years and issue that same challenge. So, 18 years ago, I worked for Fremont Investment and Loan, a successful subprime lender. While there, I learned one very important thing, and that has shaped my life. That is, for a time, the top salesperson at Fremont made more money annually than the CEO and president of the company, well over $2 million a year. Ever since, my goal has always been to be the top salesperson. I don't want to be the top CEO. I don't want to be the CEO or the vice president of this or that. I want to be the top salesperson because what I learned is this: when you're the top salesperson, you're really the one in charge. Does that make sense? It's the golden rule. He who makes the gold makes the rules. So my challenge to you is to be the top salesperson on your sales team, your office, your region, whatever it is that gets you to the next level. Do you accept that challenge? I hope so. So, like I said earlier, today is really a compare and contrast between the average and above average mortgage loan originators. What I'm going to share with you today is how above average mortgage loan originators increase their income by up to 30% without making hundreds of cold calls. Does that sound like something we can all get behind? I've spent years researching. I had done dozens of interviews, and I am certain you will be surprised what I share with you. The first thing I'm going to share with you are the top reasons the average mortgage loan originator gives for not originating non-QM loans. Keep in mind, these are the guys who fund only one loan a month. So number one, how can you do these loans? Now this comes in two varieties. The first is, how can you do these loans? Non-prime ruin the country, right? And I'll talk a little bit more about that later. The second variety is, how can you do these loans? What are non-QM loans? That's a real question. They don't even know what non-QM is. Number two, I don't have those kinds of customers. Again, I'll talk about this in a little bit. And then lastly, I don't have the time. I just don't have the time to do this, right? The thing to remember is that you never hear these kinds of excuses from above average mortgage loan originators. So, let's start with point number one. What is a non-qualified mortgage? So, how many of you can tell me what a non-QM loan is? My guess is almost everyone is familiar with the term non-QM, but few can explain it in any detail. For those of you who don't know, I'll give you a brief history / definition of non-QM. After the Great Recession of 2008, a lot of people in this country felt subprime lending practices were to blame for the economic disaster. So, hearing the cries in Washington, two people, Senator Christopher Dodd and Representative Barney Frank, wrote and introduced the Dodd-Frank Wall Street Reform Act. Within Dodd-Frank, they designated a good loan by calling it a safe harbor loan. I'm going to put that in quotes, safe harbor loan. A loan only receives safe harbor status when 8 specific factors have been qualified. Right? I won't review those 8 factors. Originally I was going to, but we only have 30 minutes. Right? By reviewing all 8 factors, it's presumed that the lender has made a, quote, reasonable good faith determination that the borrower has the, again, quote, ability to repay the loan back. That's also known as ATR, ability to repay. The loan is then given safe harbor status, and with that status comes a, quote, presumption of compliance. Right? A presumption of compliance prevents litigation from borrowers. So what I've just described is an agency or conventional loan. So non-QM lenders or non-qualified mortgages do not receive safe harbor statuses. Non-QM lenders review in detail the same 8 factors, but have a higher tolerance for what they'll accept to satisfy ATR. For example, non-QM lenders will accept bank statements for income when conventional lenders will not, and the allowable DTI is typically higher than conventional lending requirements. So let me stop there. How many of you feel like the guy on the slide right here? A scowl, fingers in your hair, staring at the monitor in disgust, right? And that's understandable because this stuff is pretty boring. The good news is you don't need to know all this information to sell non-QM loans, right? So here is all you need to know when somebody mentions non-QM. 90% of all non-QM loans consist of bank statements for income or DSCR loans for financing investment property. Everything else is filler, right? Let me say that again. 90% of all non-QM loans consist of bank statements for income or DSCR loans for financing investment properties. Everything else is filler. That's it, right? So bank statements for income is for self-employed borrowers and consists of 24 months business or personal bank statements in lieu of tax returns, right? There's a minimum FICO score of 640 required. Loan amounts are from 150,000 to 1.5 million. 85% max LTV on a purchase. 80% for a refinance, including cash out, excluding Texas cash out. Right? Both LTVs that I've just discussed are 5% higher than our competitors. So this is what you sell. If you can get your borrower 5% more LTV than anyone else, you got the deal, right? DSCR stands for debt service coverage ratio and means the borrower leaves the income and employment section of the 1003 blank. The property income qualifies on the property's ability to cash flow. So there is no income provided. It's for investment properties only. You have a minimum FICO requirement of 680. Loan amounts are from 150,000 to 1 million. 80% is the max LTV for a purchase and 75% LTV for a refinance, including cash out. This is 10% higher LTV than any of our competitors. This is what you sell. If you cannot sell this product, you're in the wrong business, right? We have 10% higher LTV than any of our customers. Does that make sense? That's it. These two programs account for 90% of non-QM loans. Now, I know what you're thinking. What about all those other non-QM products? For example, asset-based lending, non-warrantable condos, condo-tels, foreign nationals, non-permanent resident aliens, ITIN borrowers, 1-month bank statements, P&L only, 1099 program. These are all what I refer to as a niche product, a niche product, a niche product, whatever you want to call it. In my 18 years of experience, I find that these types of loans account for fewer than 10% of non-QM loans. My point is, with only 30 minutes, it doesn't make any sense for me to discuss these programs because they account for so few loans. It doesn't mean these loans don't come up, but if they do, call or email me. By the way, don't worry about writing any of this down. After the webinar, you'll receive an email containing more information about both bank statements for income and DSCR loans. If you want to learn more about either of these two programs, I'll have a separate webinar covering both topics individually, or you can visit the blog and podcast section of my website, nonqminsider.com. So, secret number 1. When an average MLO asks, how can you do non-QM loans? An above average mortgage loan originator responds by saying, don't get caught up in the weeds. When you think of non-QM, think of bank statements for income and DSCR loans. My advice is to check your recent agency fallout for self-employed borrowers or investment properties with DTI issues. That's really it. Keep it simple and don't get caught up in the weeds. All right, let's move on. So when I was a kid, I watched a short cartoon called The Grasshopper and the Ants. The story is about a grasshopper that comes into town playing a fiddle. He gets the ants excited, and then they stop doing their work and instead start singing and dancing. The queen ant then gets wind of this. She comes into town and tells everybody to get back to work. She then scolds the grasshopper and tells him that winter is coming, and if he doesn't prepare, he's going to be sorry. Well, all the ants get back to work, and eventually winter comes, and who do you think is left out in the cold? Of course, it's the grasshopper. He nearly freezes to death, but the ants take him in and save his life. The mortgage business is very similar to the cartoon, The Grasshopper and the Ants. You see, right now, you're all making hay while the sun shines. And by that, I mean interest rates are at historic lows and loans are coming in like never before. But at some point, it will no longer be sunny. Rates will go back up and you're going to freeze. And my point is, advertise your non-QM products now so that when the mortgage winter comes, you'll be prepared. Let me explain. Can we all agree that a paper business is booming right now? Of course we can. Are you talking to a lot of potential borrowers, referral partners, and realtors? The answer again is yes. What I'm asking you to do is start planting the seeds now so that you'll reap the rewards in the future. After every conversation or email with a realtor or referral partner, be sure to tell them that you have loans for self-employed borrowers and DSCR loans for financing investment properties. Listen, if you don't talk about non-QM now, in the future, no one will know you offer the product and no one will ask you about it. Start dripping on people now. Now, I know what you're thinking. There's got to be more to it than this. I mean, how am I going to increase my income by just looking at turndowns and telling people I offer non-QM? I'm telling you, it is that simple. Let me give you an example. How many of you have heard of Chet Holmes? Probably none of you. That's my guess. Chet is also a fellow author. He wrote a book titled The Ultimate Sales Machine. In the book, he describes working for one of the nation's largest carpet cleaning service. The company had over 30,000 clients, but over time, their efforts to get new clients became less effective. Chet was hired and asked to provide a new strategy to get more clients. Instead of pursuing new clients, Chet suggested getting more business from the current clients. A strategy was developed based on government research into the benefits of cleaning carpets multiple times a year. Studies show that without carpets in the office, employees get sick 4 times more often. Carpets act as a filter, collecting dirt, bacteria, dust, pollen, etc. Right? The EPA showed that professional carpet cleaning gets carpets 1,500 times cleaner than vacuuming alone. The strategy was simple. Keep your employees healthy and productive by getting your carpets cleaned twice a year. Right? Sales staff were asked to pitch this strategy to 10 of their clients. When asked if the strategy was successful, the sales staff said no. They said it was a failure because only 2 out of 10 current customers signed up for the biannual cleaning. However, management was elated. A 20% increase in revenue was a home run. Here's the rub. The company required dogged determination to actually get the 20% bump because from the sales staff's perspective, the new strategy was a failure. The company implemented training and developed a new strategy for the program. By the time the strategy was fully implemented, the average sales representative tripled their volume by just telling their customers of the new service their company offered. So to answer your question, yes, it's that simple. Consistently telling your current customers of your new service will drive revenue. So that brings me to secret number 2. When the average mortgage loan originator says, I don't have non-QM clients, and above average mortgage loan originator says, that's not true. A recent survey reported that 34% of all credit applicants are non-prime borrowers. That's 1 out of 3. Have you not had 3 people apply for a loan? Because if you have, chances are one of them is a non-QM applicant. My point is, you will never have a better time to get the word out than right now. Now, how you tell people, how you tell your referral partners about the product may differ. Could be on the phone, it could be over the email, text messages, Facebook, YouTube, Twitter, LinkedIn. The point is, tell people and tell them with dogged determination. I'll give you an example. I have a buddy and he consistently has a series of videos he posts on LinkedIn and Facebook. They're 5-minute clips about the mortgage industry, oftentimes about non-QM. Every month, this person submits 2 or 3 non-QM loans. Right? And that's not even factoring in his agency loans. In this area, he is the non-QM king. My point is, get the word out any way you can. Because listen, can we all agree that if you start to focus on non-QM after your business is already dried up, you're too late. At that point, someone else in your area is the subject matter expert and they're already getting all the loans. Can we agree on that? Put it out in the universe now that you originate non-QM loans. All right, moving on to the last excuse. Many years ago, I had the good fortune to work with a gentleman by the name of Dan Whedon. You don't know the name, but you're probably familiar with some of the advertising campaigns he's worked on for companies like Coca-Cola, ESPN, Honda, Miller Brewing, and Old Spice. However, there's one ad campaign Dan is most known for, and that, of course, is Nike's Just Do It campaign. What a great campaign and what a great phrase. There's no goal that you've set out for yourself that doesn't begin with just do it. If you get the chance, watch the video Shia LaBeouf made about Just Do It. It's hysterical. So that brings me to my final secret. Just do it. If you haven't noticed, then I'll point it out. I've spent very little time discussing program niches, calculating bank statements, DTI, non-warrantable condos, or any other product guideline. The reason is you don't need to know that stuff right now. If you spend too much time getting into the weeds, you'll never be able to see the big picture. What you need to do is just do it. Go to your stacks of turndowns and see if there's a potential loan. If you have any questions at all, ask me. I'm your product knowledge expert. When you talk to a referral partner, remind them you have bank statement loans for self-employed borrowers and DSCR loans for investment properties. When an average MLO says, I don't have the time for non-QM loans, I don't believe it. I just don't believe it. Above average MLOs say, just do it. Did you know that the average person spends 2.5 hours a day on social media? Don't waste time on the price of tea in China, right? Does that sound goofy? By that I mean people spend hours of day lamenting about things that they have absolutely no control over. It's a waste of time. Another suggestion is don't wing it, right? Have a plan. Add or update your email signatures, write a script or an elevator pitch, have a daily, weekly post or email campaign. The point is have a plan. Lastly, don't invest any time thinking about past failed attempts. I have so many I can fill a book, but that happens when you're always trying new things. I recently read that it takes 100 attempts at something new to typically yield 2 or 3 successes. Keep trying, something will hit. So let's recap. After reflecting on 18 years of experience and dozens of conversations with above average mortgage loan originators, I can tell you that the secret to increasing your income is simple. Do you remember the most common excuses given by the average mortgage loan originators? How can you do those kinds of loans? Right? I don't have those kinds of customers. I don't have the time. Right? An above average MLO doesn't give excuses. Right? When an average MLO asks, how can you do those kinds of loans? An above average mortgage loan originator says, don't get caught up in the weeds. When you think of non-QM, think of bank statements for income, 85% LTV on a purchase, 80% on a refi. DSCR loans for investment properties, 80% on a purchase, 75% on a refinance, right? When an average MLO says, I don't have those kinds of customers, an above average MLO knows 34% of all applicants are non-prime borrowers. Instead of disregarding those applicants, they get the word out about offering non-QM products. Lastly, when an average MLO says they don't have the time, an above average mortgage loan originator says, just do it. Right? I found that most people don't do what's necessary to be successful. Instead, they make excuses. Do you guys agree? Do you agree on that? If so, what kind of person are you? Okay, we're just about done, but how many of you feel like this person on the slide? Are you asking yourself, what did I just sit through? I thought we were going to be discussing non-QM loans. Don't worry. After this webinar, you're going to receive 3 emails. The first will contain the mortgage dictionary I promised you, right? The second will contain rate sheets, matrices, and program descriptions for all of Home Express's loan products, right? The third email will contain a broker package with instructions. If you're not currently working with Home Express Mortgage, please complete and return it to me. The broker package is easy and should take no more than 10 minutes. The old process takes about 2 days. Okay, as we wind down, let me ask you a question. If all you got was one loan after looking through your current stack of turndowns, would it be worth it? I'm going to answer that and say yes, because that's an extra commission of roughly $7,000. After this webinar is over, go back to your desk and look at the loans you've turned down in the last 12 months. See if just one of them fits our guidelines. What about moving forward? Right? If all you got was one additional loan over the next 3 months because you consistently reminded referral partners of your loan programs, would it be worth it? That's another $7,000. Combined, that's $14,000. I definitely think it's worth it. Okay, folks, thank you for attending this webinar, and thank you for staying until the end. If your company is not currently doing business with Home Express Mortgage, complete the broker package and email it to me. If you're a mortgage loan originator or already working with Home Express Mortgage, I'd like to challenge you to find one non-QM loan from your current stack of turndowns. It may or may not fit our guidelines, but a journey of 1,000 miles begins with one step. Don't forget to visit my website, nonqminsider.com. I post a blog and a podcast for additional information. I'll have additional webinars with information about using bank statements for income and how to calculate debt service. Lastly, if you have any questions at all, please call at 714-267-2359 or email me at fzuda@homexmortgage.com. Thank you again for sharing your time with me, and have a great day.